George of the jungle, strong as he can be.
Okay, welcome back to thecreditjungle.com. This is George Anderson, and this is going to be part 4 of 4 about no down payment loan options. And we're going to talk specifically about Utah housing loans and what makes them a little bit different. You can go to utahhousingcorp.org. I'm going to have my assistant scroll that website across the bottom of the page here. And it's pretty much everything you need to know. You can click on the website and find out about it. There are a little bit higher credit score requirements if you want to get the best interest rate. If your score is between a 620 and a 660, they do have a score program. For most people, you would be better off trying to figure out what you can do over the next maybe 30 to 90 days to improve your credit score. And I've got a few people that I am doing just that with. That we looked at the numbers, we looked at the reduced amount of money that you can borrow towards the down payment and closing costs, and it's just a much better deal that if somebody is not getting kicked out of where they're living right now, if they have the luxury of waiting for a little bit of time to work on the credit, the first home program with Utah Housing is a great option. It requires a middle credit score of 660 or higher, and then you can borrow up to 6% of the purchase price. So on a $300,000 purchase price home, you can borrow an additional $18,000 to cover the down payment and the closing costs. Well, the down payment would be 3.5%, so that's $10,500. So there's another $7,500 left for closing costs. The thing on a Utah housing loan is that the closing costs are higher, and rather than going into a big explanation about service release premiums and coupon premiums and everything else that allow lenders to waive the fees, some of the fees or all of the fees, that's not an option with Utah Housing. So the closing costs are typically going to be 3% of the purchase price of the home, whereas on any other type of loan, 2% is going to be able to cover that. So you got to cover that extra 1% cost on there. But these are great loans again. And they don't have a geographic restriction based on where you buy in the state of Utah, but they do have an income cap, and they also have purchase price cap. So they've got a little bit of both, and then again the higher credit score requirements than you would otherwise have in there. So where does the money come from on this? Okay, these are what they call bond loans. Okay, so people that buy municipal bonds or invest in state-issued bonds, okay, the state looks for places to go and invest that money, and one of those things that they do is they will take somebody who's retired or whatever, and maybe they've got a few million or a couple $100,000 or whatever, and they put it in municipal bonds. The state will then take that money, and they're saying, okay, well, we got to generate a rate of return off of that money so that we can pay the interest back to the bondholders. And one of the options that they do on that is to lend it out and invest it in real estate. I got a good friend of mine who's a real estate broker, has a very successful brokerage, and he says, when the bank is lending you 100% of the purchase price of a home, the bank's actually the one buying the home. So, you don't really have a whole lot of say in the matter about how they structure the loan or what their requirements are, because when you don't have any skin in the game, it's the bank who's making the rules. And that's kind of how it is with Utah Housing. But these are great loans. I do a good number of those every year. I love working with the people who just, maybe they've got, $5,000, but that $5,000 is just, it's not enough for the complete down payment. So you can use Utah Housing and borrow some of that additional money. And again, the key there is that we are borrowing the down payment. Most Utah Housing loans are going to be an FHA loan with a 3.5% down payment. So in other words, FHA is going to lend the 96.5% of it, and then Utah Housing is going to lend the other 3.5% for that gap for the down payment. It is a loan, and that loan is paid back at an interest rate that is 2% higher than the rate on the first mortgage. So if the first mortgage rate's 3, then it's an FHA insured loan. It's bond money coming from the state. I'm not going to do another take on this one because I'm too far into this explanation already. So for those of you who caught that mistake, please forgive me. But anyway, so FHA is the insurer on the loan. They are not the lender. But so the state of Utah is the lender on it. But that second mortgage carries an interest rate that is 2% higher than the rate on the first mortgage. So if the first mortgage is at 3, second mortgage has a payment that's based on a 5% interest rate. And then there is a getting a commitment back from Utah Housing as well, but that normally turns around very quickly. It's basically same day or next day. So similar to USDA in that respect, except a little bit faster. But Utah Housing, another great program, utahhousingcorp.org, give you all the breakdown on the areas, the loan limits, the purchase price limits, the income limits, the credit score requirements. Just all the information is there. And for some people it may be a great option, but for some people we might look at what some of these other options are that we have talked about in parts 1, 2, and 3. So thanks for coming in. Thank you for subscribing to my channel, which you can do if you push that button there. And I'd be delighted to talk with you about your situation. This is George Anderson, and this is thecreditjungle.com. Have an awesome day. Take care.